All right, we're live. We're back. What's up, everybody? This is Sunny Ray, the Sunny Ray Show. Today I'm joined by Grant Lawrence. Grant's calling in from beautiful BC, right, Grant?
Yeah, exactly. In the interior, yes.
And you said you're in Kelowna, right?
Yeah, just the greater Kelowna area. Yeah, definitely looking at
Definitely a lot of fond childhood memories, man, from Kelowna. My parents took us out there every summer, every 2 summers, and I just remember the trees and the sun and the oranges and the mountains. It was really, really just like a beautiful, beautiful place to spend our summers. So lucky you, man. Hey, Grant, why don't you kick us off by telling us a little bit about Valhalla? Valhalla? Am I saying it right? How do you say it? Valhalla
yeah,
Private
Valhalla. You got
Cap.
it. Yeah,
So tell us a little bit about the firm. You know what your mission is. Maybe let's keep it under like a paragraph or two, and then we'll come back
sure,
to that. Obviously, near the end of the interview.
sure, certainly. So, Valhalla is an organization that was kicked off by our chairman 22 years ago, and I joined 9 years ago to help with the management of the angel groups in BC. So there's angel groups in Vancouver. Sorry, angel groups in Edmonton, Calgary, BC, as Kelowna and Vancouver. So we have four chapters, let's call it. And the other services, besides having pitch sessions and bringing investors and founders together, is we do some training for investors and founders. So we do that across Canada and internationally. And then a third arm is do some M&A work. So for the founders that have gone through, raise capital, they keep in touch with us and they say, hey, we want to look at exiting in 5-7 years. We will help them with that exit strategy as well. So we are an active angel group on the west coast of Western Canada, and we see a lot of Western Canada deals, as well as we're seeing more coming up from the States these days, as well as, of course, Eastern Canada.
Interesting,
So that's
interesting.
it in a nutshell, yeah.
Cool. Lots of questions come to mind, but let's keep let's stay on track here. I wanted to ask you a little bit about your background, right? So maybe take us back to growing up. Like, what were you into as a kid, and did any of that,
Oh,
foreshadow a career in business?
sure. My parents moved when they were pregnant with me from England, so I was either going to be an Australian or a Canadian. They flipped the coin and said Canada's quicker to get back to London, England.
Okay.
And I grew up in the Ottawa area. My father was a master's electrical or master's engineer and was at Bell Northern Research at the time, became Northern Telecom. So not that I was exposed to a lot of a lot of that growing up, but we grew up in an immigrant area, so everybody around us was first time movers to Canada and grew up with a lot of different nationalities and people, which was very cool. So I was very heavily into to sports, and then went on to Queen's University, so a couple hours away in Kingston. Did BCom, ran a business while I was there, and also started up an entrepreneur group there for the students and myself as a student. Most of the entrepreneurs were too busy to actually attend. They're always with their spare time running their businesses. Um, and then got into the software space in Ottawa at the time. So Silicon Tundra, and was with the first company. We ended up doing an IPO. I had a small part of that, played a small part, went down to Wall Street just to pitch the company to investors. Didn't deal with the investment bankers, anything direct like that, but did experience it. And then the CFO of the company that went public asked me to join him on a new company. So went over there, and that one got sold to 3M. And then the third one got investment funds. There was two gentlemen writing software, and they brought in about 7 or 8 of us at the same time. And a company from California flew up and said, "We'd like to buy you." So I had three sort of good experiences, and I stayed with that company under the new ownership for 7-8 years, and ran the U.S. federal space, which is totally different. I never, working with the U.S. government, so the Army, the Navy, the Air Force, the Marines, CDC, Department of State. That took a lot of air miles. I was all over the world, wherever there was a consulate or an embassy or a fort out there, I probably had a chance to visit it. And then moved to the Kelowna area from Ottawa, and was able to take 6 years off and started up a couple nonprofits and did volunteer work for the community. And that's when I bumped into the career paths that students were being offered during high school, and they had to come up with a graduate plan, so to speak. What are you going to do with your career? Which my sons went through it, and the second son, they modified it in the second year, which he was 1 year behind our eldest, and he finished the course in 2 sessions. I said, well, so what are you doing for the rest of it? Well, I got to hang out in the library. Which is what? Okay, so I approached the teacher, and I got the time to teach the kids financial intelligence for the rest of the semester, which led to bringing in the local accelerator to talk to the kids about innovation. And that's where the CEO at the time said, hey, you should join the local angel group. So I did that, and after a year, they asked me to help manage it, and that's what I've been doing ever since. So managing the local angel group, an active investor, and then do volunteer work for the UBCO for mentoring their startups, as well as the forum, so the female-led founders in the forum, and then work for Accelerate Okanagan, so the local accelerator, helping as an investor in residence, and then similarly with Innovate Calgary, helping mentor startups there, and then Foresight Canada, the national clean tech accelerator. So across multiple areas.
That's wild. So you've spent what 20 plus years in enterprise software sales. You built and managed indirect sales channels across North America, Europe, Asia. What's the hardest lesson you learned doing that kind of work?
The hardest lesson is predicting if it's indirect sales, meaning VARs and systems integrators, is that they're backlog driven. So they are going to fill their pipeline with their consulting services built around your product until they can't do any more. And then they stop going out to sell the product because they now have their 3 months, 6 months, 12 months filled, all ready to deliver. Every dollar of software ends up being $10 of services or $12 of services. So the predictability of that channel was pretty hard because they get full and then they stop activating with customers. On the direct sales, that was much easier. Of course, you've got your own destiny that you can fulfill. And what we found was that we had coverage from marketing, but the company, the last company was with, their budget for marketing was minimal. They were like 3 times the standard for R&D spending. So they took money from marketing, put it into R&D. So their products just kept getting better and better and better, and the customers like that. So it ended up being marketing in the way that it turned out to be viral and referenceable. So that meant the sales teams had to be their own destination, control their own destiny, so to speak. So it was very much, you're going to be on the phone, reaching out to people, running seminars, running webinars, reaching out to the customers all the time. We weren't expecting leads generated by corporate or the marketing team at all. So it was a little bit different to see and nothing was inbound. Let's put it that way. It was all outbound at the time. So that created the challenge in the federal space of either you're a hero or a zero, because it's big deals that you're doing, and it's either you're going to get it or you're not. And the company had to accept the fact that putting an investment into the federal space was a long-term investment. It wasn't short sales cycles. So when you had that alignment between corporate investment and the team going, okay, this is not a 2-month sales cycle, this could be 6 months, the longest one was 3 years, then you knew that you had the flexibility to succeed over time.
Got it. So as you mentioned, you were part of an IPO and also went through a corporate buyout. What did those two different experiences teach you about how companies really work?
For the IPO, it was seeing how the governance changed. And it was, because now you have to comply with the new securities exchange, the reporting. At that time, we didn't have SOX and what was the other one that came in? The antitrust laws from WorldCom and Enron and so forth. All those changed the rules such that we had to later on, the people were becoming almost personally liable for forecasts, and they had to sign off and say, yes, this is in. Oh, so not the forecast, but the revenue recognition side. You had to actually sign off and say, yes, this is in. There's no side deals. This is pure revenue coming in. So it changed some of that behavior because they pushed down the responsibilities. You cannot go fill the pipeline with deals that are not actually accurate. So we saw CA go and fill the pipeline, meaning their distribution. So their VARs, their VADs, their distributors, they filled the pipeline and sold everything to them, but it wasn't actually going to the end user. So that was another one that pushed these new regulations from the Security Exchange. And so we had that come in. That was a change in the governance and the responsibility being pushed down to VP levels, executive levels. So that was a big change over time. And then the purchases, I would say, trying to align and identify culture. So a California company and an Ottawa company actually had quite a bit of different culture, and that created some conflict. But the way in which it was brought forward to the staff and employees, hey, cultures are very similar. Well, they weren't, and it created some conflict, and it also created some concern, of course, over redundant spots. Where's all the duplication that people are going to be removed, and in particular, the I would say there's some anxiousness in the development side to start, and that they weren't affected. Like the developers, in fact, the Canadian development arms actually grew over time. So that issue was less and less an issue. It was more the sales and marketing, HR. There's some of that being duplicated. So culture alignment, and then actually doing what you're going to say you're going to do to help the companies go forward. Now, we were the first acquisition by that company, and they got better. They bought more companies that got better and better for those alignments inside, so that people would feel comfortable, be working, and move forward together faster.
Very interesting. So before we switch gears, just one last question. So looking back kind of at those 20 years of, in B2B, which single skill from that era do you rely on most today as an investor?
I would say understanding the value proposition that the company is putting forward, and understanding what they see today while they're learning their sales pipeline and learning the sales cycle. So founders are, they're forced in that position to do founder-led sales to start, and can they create a playbook, a repeatable pattern that is going to be quite predictable, such that when they start to hire, salespeople or the chief revenue officer or VP of sales, that they've got something that can be grabbed and run with. And today I'm seeing that the smart ones are starting to automate some of that with AI, doing the search, the research before they call out to the customers, so they can have a reason. What are the signals in the customer that shows that they're ready as an ideal customer profile to go against and say, hey, I know you're doing this, this, and this in the marketplace. We understand this is how we can help you solve that problem. So having that repeatable playbook from that founder is critical, and that becomes one of the things I'm looking for. I'm also looking for, where is the revenue going to come from? What type of customers? So I'm not a fan of, funnily enough, government sales, even though I was in help doing that. I want to see revenue that's generated outside of government, municipalities, and schools, so education. So I'm more in the private sectors, where I'm looking forward to see revenue for that founder coming in.
And what was the first angel investment you ever made, and how did it go?
The first one of the first ones, I just got an email from the founder saying we're just about to be bought. So it looks like it's going to be about a 5x. So that'll be nice. The second one, they came back and said, hey, we're closing the door. And that was during COVID, because they were an application that required people to be traveling, and nobody was traveling. So their their application was blowing flat. And the two founders, notified all the investors and said, and we have all your money to give you back in 10%. And we all went, how did you do that? Like, you had the money for a year and a half and now you're going to give it all back. Said, yeah, we just wrote checks out of our own personal accounts. So yeah, when they came back 6 months later, said, here's our new idea. How many people do you think we wrote checks back to them? All of us. And bigger checks. So they're doing quite well. Expecting to see something later this year from them on some type of exit. So that's really cool. And the third one was a vanity one, which I'll never do again. It was saying, hey, cool, it's a consumer product. It was a distillery, and they just declared bankruptcy. So that one was a little bit of, hey, they're in my backyard. I can take people to see it. I got the cool bottles in my cabinet here. So I'm not doing a vanity one. Again, that was the only time I've done one of those. I'll be looking more on the enterprise software is where I like to go.
So you started investing in 2015, and within 2 years, you were running Valhalla Angels chapter. So what was it about angel investing that grabbed you so fast?
It was the two things, was the people there. So everybody had different backgrounds and contexts, different experiences. And thus there was different questions and due diligence that they would put forward. So I could bring, some of my experience to bear when there was a company that fit where that marketplace that I understood. But if somebody says, hey, well, this is a med tech device. Well, I don't know anything about med tech. This is an ag tech. Well, there's people in the room that know about ag tech. So I was learning from them and being able to do joint due diligence with them, which, took a lot of that, because that could be 20 hours of effort. A smart angel is going to do 20 hours of due diligence. So you can't do that on every opportunity. So having a team there or a group of like-minded individuals is part of the angel group, which is still the same reason a lot of people join the angel groups today, is so you can share that due diligence effort. And then you can pool your money as well to write a bigger check and say, okay, we're going to do small checks, but we'll pull it together to have that bigger check as an aggregate, SPV or holdco into that. So that was really important. And then seeing curated deals. So smaller selection of deals that look very promising, a good group of people that are fun to be around with, and can help spread the due diligence and ask good questions. Those were the key things that got me interested. And then voting with my dollar of what I want to see come into existence and pull those companies forward to be successful. Those were key as well.
Was there a single founder or deal that changed the way you think about early stage investing?
Yeah, there's one founder that just, I think, was the smartest founder I've seen. Came forward. There's two of them. So we had one of them come and pitch to us in person. And the team had been approached by the industry to solve the problem. So that was very unique, that the industry said, hey, we want you guys to solve this problem for us. And they went out and researched it. They've pivoted a couple times within that problem that they were going to solve. And they've now got, I think, a very good market. But they told us, here's what we're going to do. We're going to raise 3 times. We're going to be diluted down to 15%. And we're totally cool with it. And I've never heard, like, most of the time the founder's like, hold on, I can't let go of control. There's quite a few of, I know I'm going to be diluted, but if I get diluted too much, and that's a concern for investors as well. If you get diluted too much, are you interested to proceed forward any further, right? So we want to help them in their own best interest to keep whatever percentage of the company they should be motivated to keep them going forward. But these founders said, no, we're going to raise 3 times. We'll be down to 15%. And we're totally cool with that because we're going to be building $1 billion company. And they're on their way to doing that.
Nice. So, it's not a surprise, but angel investing is full of losses. So what's the toughest loss you've ever taken, and what did that teach you?
Well, that vanity one was the toughest. And there was 3 of us as investors who would meet with him on a semi-weekly basis for his distillery. It was local product. You had some tax benefits from the BC government here for investing in local. And he was a CPA, but he couldn't do a budget. So it just floored us. And he would not take our guidance. Out of the three of us, one was a specialist on development, one was a exempt market dealer, and then there's myself. So I had three people with diverse backgrounds, and every time we would sit down with us, like, you spent more on the tasting room. There's no tasting room needed right now. Work on volume and get it into the stores. And so it was, I think it was looking at governance and rights over helping to manage the company. That's not that I go and look at those critically today in terms of, I want to see what the governance is. I want to know what my information rights are. How are you going to communicate with us? Because this fellow wouldn't be communicating, and then he'd be spending the money somewhere else. So that was the challenge. That was the lesson learned, so to speak, is how, and my bias of they're going to work as hard as I would work in the industry. That was, in their business. I just thought everybody's going to be like that. They come across like that. So I found I need to ask more questions as to what's their work habits, how are they going to deal with challenges, how do they feel about certain conditions going forward, and what are they going to do about it. And then I bring in my CFO, which is my wife. So, okay, now I've done all this work. Now you tell me your gut feel when we met with this person. So that's a little bit of what we do now.
You've also said that you enjoy the rush of helping founders navigate challenges. Can you describe a moment where your hands-on involvement genuinely changed the startup's trajectory?
There's been a few. Nothing jumps to my mind, but it's always this feeling of, okay, when they call back and say, "You just saved me 10 hours of time by asking these questions and making me think differently about it." So let's see. Let's take this PhD founder who's trying to get into sales. So going through, here's a sales cycle. Here's the questions to be asking. Here's how to conduct a meeting. Here's how to open the meeting. Here's questions to ask, and then giving them some guidance around how to listen. And your success is going to be in a sales call, a discovery call, that you talk 40% or less of the time, and they talk 60% or more of the time. And right now it's the opposite. So learning to ask a question and dig into that. Why? Can you explain how? What happened? How did you try and solve that? They're doing that more instead of going into product, because that's where they come from. The founders all come from, this is my baby. I've been building this product for years or months, and they want to talk product because that's the easy thing to discuss and default to. So that was really nice for this founder to call back and say, you know what, that just helped change the whole conversation and helped me proceed forward to the next step on the sales cycle. So that was very gratifying to hear that. And there's been a number of those times on deal structure, data room right now, helping out two companies with their data rooms. And what does that look like? This is an opportunity to do another narrative for the investors and the flow and make it frictionless. So they go, oh, I never thought, whatever what can be a small point to me because it looks natural as an investor can be a big point to them because they haven't thought of it. Oh, got it. Now I understand why. So helping them get in the shoes of an investor for a while opens up their eyes, and they can now understand why they're getting certain questions.
Hey, Grant, I'm going to ask you the next question. And if you can just start answering it, that'd be great. And then I'm going to step away for about 10 seconds. I've got an oven beeping in the back. No one in the house. So I guess this one I'm really excited to ask you. So how did your worldview about risk and reward shift when you moved from being a salaried executive to writing, personal checks into startups? Just give me 1 second.
Sure. That's a good question. So I guess the first thing I did was to try and set aside a certain amount of a portfolio to put into this higher risk, asset class, startups and new founders, and keep to that. So if I could keep to that, percentage of the portfolio on an annual basis is going to be for new opportunities, then it was to, especially in the first 6 months, it was so cool to see all these ideas. And I was recommended, do not write a check in the first 6 months. learn the patterns, see what it's going to be, and then build out a portfolio. So you want to get 10, 12, 15, depending on which analysis you look at, in your portfolio, so that you can say, okay, one will hit a big home run, two or three will get, 2 or 3 times your money back, 4 times your money back. The rest are either going to turn into zombies or pass away. And so knowing that going forward, it was trying to now gauge, one, the customers that they're going against, and do they have something that's going to be solving a real pain. Somebody's, has to have your product or solution, not a nice to have. And will that be maintained over the course of the company's life? So no matter how much due diligence you put into it, for instance, we just had a 10x as and we had a check giving party this past week. Well, that the founder had previous success, but on this company, the amount of information we got was zero almost. It would be, so we didn't get insights into the company on a quarterly or monthly basis from the founder, because the founder was so busy. But what did happen is, 5 years later, they gave us 10x our money back, but unexpected. So I had written that one off just because we couldn't get information, and there is a 10x that came back. So even though we're doing the due diligence, looks strong, we still can't predict 100%, but we can reduce the risk as much as possible. And that the first early stages is betting on the people, and then validating that there is a market there and that they can, protect and grow their moat over time.
You wear a lot of hats: startup studio, Up Capital, Accelerate Okanagan, Scale Up Canada. How do all these pieces fit together into like one mission?
Yeah. So what I would like to see is Canadian founders getting stronger and better, and becoming, using one of Jeffrey Moore's sayings, the gorilla. I want to see the Canadian companies being the gorilla. So I'm really motivated to help Canadian firms move forward and be successful. And that's where seeing all these different, it looks like I'm across all these different things, but they all have the common theme of helping founders and startups at the early stages. Right?
Yeah.
All of them are to do that. And one of the biggest challenges I'm seeing right now is the growth capital. In Canada, that's a challenge to get that. And we either lose the companies, they fold, or they move somewhere else. They go to the States. So one of them working with right now, they're actually looking at Sweden as the option. Okay, money looks easier in Sweden. They're going to help me build out. They're going to help me find pilot customers, because their innovation over there is a slightly different approach than what we're doing in Canada. So it's just that growth capital, and helping them get ready to help be ready for that second stage of growth is where I'm trying to get them. They can come to the angel groups, and we're a stepping stone to get to the bigger money, right? And so if we can help those angels, help those founders get ready for the bigger money, that's great.
Yeah, that's something I'm personally really passionate about as well, because it's kind of crazy, like you think about Canada and it's like BlackBerry born here before iPhones happened. You had,
Yeah.
I with my own eyes saw Vitalik write the code for Ethereum in downtown Toronto, a couple of blocks away from all the banks, number 2 crypto asset, right, in the world. I went to University of Toronto. That's where Ilya and Hinton and all these like AI gods are from,
Yeah.
right? You've got Waterloo University here. You've got like all this talent, all this innovation, even, right? Like I said, even this AI thing, you could argue to some extent that a lot of that was born in University of Toronto. And so the fact that we're not able to capture that upside as a country just pains me a lot. And so I think it's super cool that you're focused on that, because if people aren't, obviously it's not going to solve itself.
Yeah, I'm just one little, like there's got to be a lot more people doing it. I'm just one little, person pushing forward for that. And
Yeah, I love
there's
that.
some
So
really smart people out there who do much better
yeah.
than me on this stuff. Yeah.
So you just led the Northern Angels Summit 2025, training new
Yes.
investors in Northern BC. So why is it so important to build angel networks outside of just, let's say, Vancouver and Toronto?
Oh, there's a number of different reasons. Of course, we want the local communities to have, we've got this democratization of the ability to build companies. AI is helping with that. For $20 a month, you can go and do so much in remote areas. It doesn't matter where you are. So from that perspective, and then the local economies, I think they need to be booming. That creates wealth for everybody. So the Northern Innovation Network, their Angel Summit, we just kicked off this year's summit last week. So we've got another round of, I'd say, 25 investors, and half of them will be returning, and half of them will be new, and similarly the companies. So to build the community out, to create a critical mass where people are saying, hey, I'm not moving away, I'm staying, and we're attracting additional people to move in, I think is awesome, because it's a different lifestyle up there as well. They're such friendly people. My gosh, hey, I'll pick you up at the airport. Hey, you want to go tour around this? Hey, let's go to dinner. Like they're awesome that way. So these communities can start to build out, and if they're dependent on certain industries, they can now diversify those. Like we have Northern BC, either dependent on mining, natural resources, pulp and paper. And now if they can move into other areas and have these other types of jobs coming up for them through the innovation that founders are bringing to the table, that's awesome.
Yeah, I love that. So Up Capital helps founders go public. I guess what's the biggest misconception founders have about taking a company public?
Um, a lot of the founders don't have that experience, which is obvious. So then it's, what are all the rules that are defined by each of the different boards? Meaning here's the CAC, the stock boards, the stock markets. What are the requirements, and how do you meet those requirements? So the governance, getting it to, hey, we need audited financial statements. Okay, what does that mean? We need to create the investment packages, which will be different. We got securities exchange commissions that need to be followed, either the provincially and the boards. So you've got a whole slew of another layer of regulation, administration to ensure that you're meeting and doing. And then the other aspect is, how do you ensure that your timing's right for that? What is the reason to go public? Is it to have a war chest of valuable shares that you can now go and acquire companies? Is it for notoriety so that you can acquire more customers? What is the real reason that you're doing this? Is it to give some liquidity to some of those early investors who've now been in there for 7, 10, 12 years with you? What is the reason that you're doing that? So it has to be a strategic move to go forward, not just, hey, we want to go public. And doing the reverse takeover option seems to be very popular in Canada. It's got a good reputation in some sectors and terrible terrible in other sectors. So I would say that that the founders have to go in eyes open and understand the regulations, and how to then the stock going to be supported going forward, so you're not delisted. What does that mean? And is there a team that's going to support you through that period of time, not just, hey, we helped you get onto the transaction and you're on the stock market, you're all to yourself, get going, right? There's other things that somebody that's going to take the concern of the founders needs to include some HR aspects to have, hey, we need to build out this skill set, this skill set, this skill set, so you're successful to maintain your position in the market as well as on the stock exchange.
Cool. Yeah, I've personally had some experience over the last few years. As the president of a Bitcoin, kind of like a MicroStrategy company here on the TSX. We raised about 25 million. And then I also sold an AI company to a pubco, and it was kind of like that RTO thing. And now it's actually doing quite well. It's called Humanoid Global. Our ticker is Robo. We hit, I don't know, 80 or something million market cap last year. It's and we just invested in Agility. I think it was in December. Anyways, Grant, I've got like a whole bunch of questions that I didn't even get to, so I would love to do a part two if you're up for it, maybe in the next coming couple of weeks.
Sure.
But I wanted to ask you, just maybe help me land the plane here. 5 years from now, what does success look like for Grant Lawrence and for the Canadian angel investment community at large?
Oh, good question. I would say we see sidecar funds coming into existence. So it's a little bit of a trend where you've got a fund as well as the individual check writers. So that the angels can be writing checks and maybe aggregating them to a hold co, and that goes in. But now you've got funds on the side that can be either either the angel investors are putting in money into the fund, or there's some corporate investors to co-fund with you, or maybe even the government's doing, BDC is saying, hey, we're going to go to the angel level to help those founders. So we need that seed capitals or the angel range capital, getting more companies building faster, quicker. So I'd love to see that happening in 5 years, and our IP needs to be better and better protected. We need to have, I think we have an IP, loss going out the door, and we need to keep that inside Canada and generate revenue from that. Those would be two of the big things right now. And of course, the third one, which is a problem with liquidity, the exit time. When I joined into the angel area, it said, oh yeah, it's 5 years, then it's 7 years, then it's 10 years, then now it's 14 years is the latest report. So that's a long time for an investor to wait around, which would make you question, okay, am I going to invest in this because it's, whatever my motivation is, my impact investing, my desire to see change, or I'm going to go put it on, the stock market or an ETF or whatever, where it's more stable, or I'm going to do blue chip investing. So we need to figure out more structured deals that help with the exits or the giving back of the money to the investors. That's why we're seeing secondaries taking off for sure. But then yields, we're going to do debt investing or something of that nature, or structured exits to help encourage more investors to come in.
Awesome. All right, Grant, I think we're at the end of our time. Again, would love to have you back at a follow-up. I had a bunch of questions I wanted to ask you as well, but we'll put it on ice for now. And thank you all. Wow, we have 20 some people synced with us here right now, listening to us. Thank you all for tuning in, and for everybody else that checks it out in the future. Until next time, Grant, I just realized, do you want to give them your website, or is it LinkedIn that you do most of your posting if people want to reach out to you?
Yeah, sure. LinkedIn is fine. Yeah, it's
awesome.
Just Grant.Lawrence or Grant Lawrence. That's
great.
So it's cool.
Awesome.
And on there, you'll find my phone number, email, all of it. Like, I actually put it on there, so that's cool.
Love it. Okay, I'm going to end this stream, and Grant, just hang out for 1 second.
Yeah,
thank you all.
Sonny.
Bye-bye, everyone. Take care.